Hello and welcome to another episode of FinTalk by Pros. Today we are delighted to host Brian Alvarez Bailey, CEO and co-founder of Alison. Welcome to the show, Brian.
Thank you for having me, Osman.
Before we dive into the show, Brian, maybe if you can give us a brief background of yourself, the story behind Alison, what's the vision, and how you see it playing a role in the industry, what you really actually do.
Sure, absolutely. So for myself, I've been a software developer for almost 20 years, just about. Ever since I was a little kid, always fascinated with being able to take things apart and put them back together, sometimes to the chagrin of my parents. Well, most of the time to the chagrin of my parents. Got into software development and really gravitated towards finance as my first job out of high school actually was working for a bank, my grandmother's bank. She was the general manager for a bank in Chicago, Illinois for about almost 30 years, I guess. And so it kind of just ran in the blood. And ultimately, I took the attitude of wanting to take things apart and build them with the earnestness and the importance of finance, especially for minority communities. And so been building FinTech software for the last 10 years. Co-founded Alison with my co-founder Jerome Dishman in 2022. And originally we started off by wanting to create an infrastructure that allowed smaller banks and more localized banks to be able to have the same compliance and technical muscle as larger banks. Obviously, not having the same manpower and headcount, but still maintaining a high level of performance because of the access to technology. And just over the course of the last few years, we've pivoted more towards having that infrastructure centered around artificial intelligence. So the idea that these smaller banks are in a position to serve their community more directly with the enhancements of things like algorithms and these agentic tools that don't replace humans, but essentially they essentially 10x humans, right? Like the goal is to accelerate the abilities of humans. And so that's really where Alison's focus has been in the last year or so, where we've created an application that a smaller bank can use to essentially run their entire back office without ever having to increase their headcount.
Fascinating, interesting. How would you summarize Alison in one sentence and why are you different?
Sure. I would say in one sentence, we're virtual banking associates
Okay.
that can be controlled with natural language. That's really what we are in one sentence. How we're different, I think a lot of the artificial intelligent or agentic focused co-pilots that are on the market today are not hyper focused on the unique intricacies of community banking. And I think that's really what sets us apart, is that we were built for that explicit purpose, and our tools are trained using that specific use case. And so I would say from that perspective, we're sort of born in the community banking space.
Fantastic, fantastic. And what, in your view, working in this space, why would you say banks still in 2025 are struggling with operational efficiency?
I think it's a tale as old as time, right? Ultimately, OpEx is going to be the Achilles heel of a lot of businesses. And I think what happened, especially as it relates to technology, was the abilities for a non-human to take human-like actions has been increased tenfold. Now, the question is, because of the unique regulatory requirements of banks and the unique uh, financial requirements of banks, do you start to trust these non-humans taking human action? And I think I think one of the most interesting things has been the practice of what we call human in the loop, right?
Yeah,
Where everything up until the point that a human actually has to make a decision can all be automated, right? Like everything up until a human has to say, yes, this is red, this is blue, so on and
yeah,
so forth, can be automated. And I think that's what we've seen, and frankly, what where the appetite of these bankers are, right? Because historically, bankers are not a very forward thinking group of folks, because ultimately they kind of have to be skeptical by nature, right? And so in the goal of fighting fraud, you have to be wary of instances where technology can seem too good to be true, right? And
yeah.
so I think in that sense, we've tried to marry the traditional attitudes of, measure once, measure twice, measure thrice, and then cut. And I think, with the forward leaningness of technology, startups just kind of want to go, 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 and they kind of want to break things as they go along. Well, you can't really do that when you're in finance. And so I think for
Yeah.
us, it's there's a balance, and I think our customers have been really good at helping us figure out where the guardrails are for that balance.
Fantastic. And you mentioned significantly reducing operational costs for these banks. What do you see as the biggest cost drivers, and how are you eliminating these cost drivers for the community banks in particular?
Sure. So I'll provide a specific use case. So the app is going to receive between 800 to 1,000 generalized alerts
Mhm.
around what could be a fraudulent transaction per month, right? So that means there was some sort of transaction that triggers some sort of mechanism that said, "Hey, this looks like it is not what it should be. Therefore, we're going to stop this from moving forward," right? Well, the thing is that a lot of these algorithms and a lot of these rules
Yeah.
don't factor in false positives, right? And so in those scenarios, you then have a human being that has to go in and verify, hey, was this actually something? Now, here's where the cost driver comes in, because that takes time, right? And on average, it's taking almost 90 minutes for an individual to go behind a quote unquote a machine and figure out whether or not something was actually what it was, and not a false positive. And so just that operation alone with
Yeah.
our application, we reduced that down to 3 minutes. So 90 minutes, 3 minutes, right? And so ultimately, we've seen cost reduction immediately in the area in the area of alerts and monitoring. But more importantly, really what our application is, where our application excels is the application. So in the past, or I guess in the present, a lot of banks are using multiple softwares to run their back office. What is hey, wrap technology that you've already spent a ton of money on, allow to those various softwares and bring them together, right? So the experience in your Chat GPT and your Claude, you're having that builds upon whatever context you've given it. Okay, rather than having to log into individual pieces of software, you log into Alison. Alison is already connected to your core. It's connected to your CRM. It's connected to your fraud management tool, and it's allowing you to have a conversation with those tools together at once, so that in concert, right? And so that's really where the real spark for our software jumps in.
Fantastic. And looking at the community banks in particular, how do you see this competing with other bigger banks when it comes to adoption, especially adoption of AI?
So you have, what advantages would a community bank have against, say, a tier one bank in the US?
Mhm.
Well, the truth is that a community bank, why someone would go to a community bank versus going to a larger tier one bank is simple, right? They want a specialized form of service. They want to feel like if they can get on if something happens, they can pick up a phone and actually talk to a human being, right? So the irony is, as a society, we're becoming more interested and dependent on machine learning and AI and things like that. But as a consequence, we still want to have more interactions with people, even if it's just for peace of mind, right? Because ultimately, when someone gets upset, they want to have a conversation with another human being. They don't want to, be put on the phone or the infamous meme, American meme, where you keep pressing zero to talk to a real person, right? And so that's the people in the US. And so what it boils down to is, if I run a mom and pop bank and put my money and feel like my money is secure, because if for no other reason I have the illusion of being able to talk to someone, I'm going to do that. So now what you're saying is, I've already got baked in the trust factor of, hey, if something happens, I can go talk to someone. Now imagine where that trust factor lied, right? So instead of saying, hey, the reason why I like this bank is because they are local and I can't pick up the phone and talk to someone, and I can go to New York, I can go anywhere in the world and still be able to use my money, because the tools that bank offers me and the products that bank offers me extend the capabilities to go anywhere in the world, like that. And I think that we want to see community banks go. And frankly, that's why we built Alison, right? Because we knew deep down that, hey, this is all binary, this is all ones and zeros. If you put the tools in the hands of the folks that already have the community trust, well, hey, now you got a compelling offer.
Yeah, absolutely. And when it comes to, I mean, banks are heavily regulated, of course. How do you handle regulation as an issue for the banks? How do you handle that?
And that's the crux of all of it, right? Because ultimately, since 2008, there have been almost consequential regulatory statutes that were created that almost make it preventative for community banks to be successful. I'm just being honest with you. And so in that way, we really designed our platform around what would a regulator say if they walked into a bank tomorrow and that bank was using Alison to power their infrastructure, right? Like that. And look, I'm the grandson of a banker, right? So ultimately, it was always my intention to have regulatory point of view when it came to anything that we built as it related to our banking customers. Because again, the goal is, if oversight can be an OpEx expense, or can be an OpEx driver, well, how do we reduce that? Well, we make it so that the regulators get an instant view of all of the bank's activities. So the bank is transparent, and the regulator now has almost an SOP to go by to say, wow, this bank is and promoting things that have dramatic viewpoint and are not dependent on human beings for it to be successful, right? Like, human beings are fallible. Somebody gets sick, someone leaves the bank, blah, blah, blah. Now you're in a situation where you have a tool like Alison, where it's following what the and state regulatory statutes are. You never have human dependent. It always is in a position where it meets the standards and the nature of what the regulators are looking for. And really, they don't ask for anything that I don't think is outside the realm of reasonable, right? They just want it, they want to have it and reusable,
Yeah, great. And what have you seen then as what's the biggest technical challenges you've seen when it comes to implementation, when it comes to really having this in place?
So here's the other really big rub here. So when we talk about artificial intelligence, right? Typically, the talking about a large language model, right? A large language model is really good at creativity. A large language model is probabilistic in nature. but that's to what a bank needs to be, right? A bank doesn't need to be probabilistic. A bank needs to be deterministic, right? A bank doesn't need to be creative. A bank needs to be resolvent. And so you've got worlds that now have to balance each other out. But ultimately, I postulate it's not about taking what large language models do well and pairing it with the deterministic nature that all banks should have. Community bank, tier one bank, whatever. All banks should have interest, period. Hard stop there. And so what we've done is we said, well, if large language models are really good at taking language and inferring what language, what the communicator's intent is, let's just do that, right? So rather than and thinking or assuming what the banker wants to do and assuming what the customer of that bank wants to do, we say let's transform their natural language into actual API calls, into rights, and then let's transform that information. Let's transport that information to a whole different other set of agents that only have one job, and that's just to talk to that specific API, take an action, pass, fail, give it back to the orchestration layer, and then the user can have a real conversation at that point based on what actually happened and not what the large language model thinks happens, right? And so that we take the conversational piece and say, hey, you can talk to this agent, you can have a conversation with it, you can ask it questions. Underneath the hood, that agent is having another conversation with actual deterministic guardrails so that it's the reads and writes and it's real data and it's deterministic as opposed to being probabilistic. So really that stance, and I think that's where a lot of the banks that we've talked to, I think that's something that the nuances of that they kind of miss. They think, oh, we can have a generative AI agent and it's going to know everything and it's going to be able to do everything. Well, that's not kind of how it works, right? Like it's a tool like everything else, right? Phillips head screwdriver to hammer in a nail, right? So it's like you have to use the right tool for the right job.
Absolutely. That's fascinating. And looking at your journey so far, what kind of results are you seeing from your early users to where you are? Any specific success stories you'd like to share?
Yeah, absolutely. So as we mentioned, we initially started off with the goal of creating tools that community banks could use and essentially compete with the larger banks.
Right.
The original permutation of the app was under the idea that it was a banking as a service platform. So banking as a service being the ability for a non-technology focused bank to work with a technology company in order to serve a group of users, right? So the technology company being the front end of the user interaction and the traditional bank being the back end of the user interaction. And so our tool was originally built to manage that the nuances of those relationships, right? And over the course of a couple of years, we figured out the opportunity is not in enabling and focusing on the bank and working with technical companies. The opportunity is really giving the bank the ability to essentially be their own technical company without having a party sort of in the mix. And so that's where things really came from. So our early successes ultimately ended up being some of our early failures because of how we were looking at the problem, right? And the problem, and again, going back to your question about the regulators, it was the regulators that basically said, look, we don't have an outright issue with banks working with technology companies, but we feel the banks are not doing enough in terms of ownership of things like know your customer and know your business and advanced profiling of potential threats. Like us as the regulators, we don't have any issue of you guys being innovative, but you have innovative within your bank and not just relying on a third party to say, hey, we'll bring the innovation. And so from
Right.
there, we said, you know what? How then do we put the innovation in the hands of the banks with the express goal of also being smart and being having a level of scrutiny and skepticism? And so the real true win earlier this year was we were working with a bank here in Birmingham that was preparing for their CRA exam. So CRA, Community Reinvestment Act, it's an act that basically says we want to incentivize banks to work in their community. So banks will do strategic investments, they'll do low to moderate income lending. All of these activities go toward their CRA credit. And
Yeah.
every couple of years, the
Yeah.
federal regulators will come in and say, how well have you been performing your CRA mandated activities? And they get a
Yeah.
rating, right? And so just like any other audit. So we had a bank that essentially had a CRA exam less than a month out, and they hadn't even really started. They had not really started the process of preparing for that exam. And so
Right.
we saw an opportunity to say, well, look, if you're going to spend, $200,000, $300,000 just to do prep for this exam, right?
Yeah.
You could give us a tenth of that, right? You can give us
Right.
a infinitesimal portion of that, and
Yeah.
we probably will be able to exceed what the humans you would have hired to do this could have done. And so
Yeah.
essentially what we did was we said, well, if you're going into the CRM, the
Yeah.
banking core, you're going into these various places to pull data to let us do that from a automation standpoint. And that's really what we did. And so we connected to their systems. We were able to generate their CRA narrative. They were able to submit it over to their regulator. And
Right.
eventually they got a passing rating, right? And so moving forward, now we've got an opportunity with them to automate other areas of their bank, like KYC and KYB. Now they're talking about opening up more avenues for small business lending and small business support, which is an area of business that they hadn't even considered
Mhm.
the year prior. So I think for us, that, because ultimately it allowed us to lock into a singular use case, but then expand out based on how well we were able to execute against that use case.
That's amazing. Fantastic. Fantastic success stories there. And when it comes to implementation, what's typical in terms of implementation time-wise?
Sure. Now, my CTO is always leery when I start talking timelines, just because he's a big believer in under promising and over delivering, and I am too. I am to an extent,
Uh,
in that, look, I've been building software applications in the financial space for a long time, and I've
Right.
seen a lot of different things, and so there's not much that really like shocks me or scares me. So
Mhm.
in that sense, we talk about Alison being modular and being and again, he hates this phrase, plug and play. I
Right.
think that gets a bit of a misnomer. I think when people say plug and play, they're implying that there's an ease of use that happens that can allow their software to become adopted. I think when we say plug and play, what we're really saying is we've built our software in a way that's well documented, that's well vetted out, and in a position to play well with most softwares. And I think that's what we mean when we say this. So
Yeah.
for example, when it comes to connecting downstream to a bank's core banking system, well,
Yeah.
there are really only a few core banking players out there, right? You got your Jack Henrys of the world, of which we're a preferred vendor. You've got
Okay.
your FISs of the world, your Fiserv, so on and so forth. So we've taken the approach of connecting to each of those entities and standardizing the way that we connect. And the
Right.
reason being is, if we've got a standard way that we
Yeah.
exchange information, that we push and pull information, ultimately we can then allow the bank to dictate how they want to see that information, right? And so from that standpoint, the integration of Allison is we used to say go from months to weeks to days. Really,
Yeah.
you could get in 24 hours.
Oh, that's amazing. That's fantastic. That's fantastic. And when it comes to just overall banking operations and automation, How much do you see happening in this space, and where do you see that in the next 5 years?
There are some huge use cases out there, man. Like, one of the things that I thought was really neat is there's a bank in the US called Grasshopper, and they're working with a technology partner called Narmi. And I've been a big fan of Grasshopper. I've been a big fan of Narmi for a long time. Now, some would look at us as competitors, which in some respects we are, but in other respects we aren't, right? Like, we are complementary pieces of software. But the
Right.
announcement focused around the technology model context protocol. So MCP essentially states, rather than connect to disparate applications together by a traditional API, which is the means of information exchange, it
Yeah.
says one application has an API, the other application has the intent and the context of what those APIs do. So it's not
Yeah.
saying, hey, you've got this API suite, I'm going to build my own so we can talk to one another. It's saying, no, you've got this API suite, I'm going to put a circle around your APIs that
Right.
will learn their intention and then push and pull information based around that. So it's a very innovative technology, and it's one of the technologies that we've been using over the last year that have expedited a lot of our interest in ventures. And so from that standpoint, I think there are a ton of use cases for MCP, right? Like, I think in situations where you're a small business and you're operating in a certain area, you may
Right.
only want to work with a bank in that area because it fits your geographical profile, right? And so being in situations where now you're going to move from one bank to the next, why
Yeah.
should you not take all of the history you have and go to the new one? Now, again, as a bank, you say, well, I don't want to give away my customers data like that. But ultimately, I think that's where things are going, where people want to own their own data, right? Businesses want to own their own track record. They want to own their own customer information. Being able to just press a button and move from one entity to the next is
Yeah.
very attractive to businesses, right? Especially in the current economy where every dollar has to count and every second, means something. I think when
Yeah.
you offer products like that, you put yourself in situations where these businesses don't now go to the large players. They don't go to the to the national quote unquote players, right? They
Yeah.
stay right at home because ultimately you're right next door. And I think that's really where technology is going, and I'm absolutely here for it.
Yeah, fantastic, fantastic. If you look at Alison, your journey, since incorporation, when you started until now, um, what do you see as the biggest challenges that you faced, and what advice maybe can you give to other people who might be in similar space, maybe starting off?
So because community banks,
Mhm.
I mean banks in general, right? That they're very conservative entities.
Yeah,
Because they are, as a startup, you have the idea that there are going to be antibodies at almost every bank, right? They're going to be people there that say, nope, we don't like working with startups.
yeah,
We don't like working with things that are new because new essentially represents chaos and disorganization. And so
yeah. Hmm.
with that prevailing, walk in with the idea that, hey, we're going to have our ship so in order that we're going to make a seamless transition between being a startup that's pitching you and
Hmm.
being a technology partner that you trust to work with you. And I
Right.
think I think that's been the biggest lesson for us is we don't go into banks saying, hey, we're going to sell you the software. We
Yeah,
go into banks saying, hey, where's your biggest problem as it
yeah,
relates to data disorganization? Where are your biggest potholes as it relates to technology disjointedness? And
yeah,
so because of that, we then say, rather than sell you something out of the box,
yeah.
let's find the right solution based on our platform, right?
Hmm.
So we're not selling a tool, we're
Yeah,
selling a value coming from an infrastructure, if that makes sense. And so my biggest advice to any startup founder that wants to get into bank tech or wants to get into finance tech,
yeah,
find a problem that can be articulated clearly, that a banking partner knows that they have, and work with them on finding a solution. And a lot of times, look, you may be in a situation where you don't actually have a startup, right? You've got, a consulting business or a quote unquote lifestyle business, wherever that means. I hear that a lot. You've got a business that is not necessarily venture ready and scalable, but you are solving a problem. So, I mean, that really is where it starts. You got to have a problem, and you got to have a bank that knows that they have that problem, and you got to demonstrate the ability to solve it, and solve it frankly efficiently, right? Because there's no sense in trading one issue for the next. And so if you can show measurable impact, you can break that barrier of trust, right? Like you can penetrate that layer of trust. And so that would be my biggest advice point.
Thank you very much. That sounds quite reasonable. And in terms of vision for Alison, what are you guys thinking? Where do you see yourselves in terms of scale? Where is that headed?
Sure. So I mean, we want to continue to focus on the smallest of the small banks in the U.S., and specific MDIs, minority depository institutions. These are going to be banks that serve minority populaces and most folks that don't have access to quality banking tools, right? Things like checking accounts with debit cards and virtual cards and things like that. So our goal is to be the go-to provider for these type of institutions, so that we can reach folks that otherwise would never have thought about opening up a bank account, and so and otherwise would never even have thought about being served by their community bank. So that we see ourselves playing. I could tell you that we want to be this billion-dollar unicorn. Ultimately, that's not why I got into this, right? Like if that happened, really why I got into this was I wanted to put power back into the hands of the folks that actually built the US, and the folks that power the US. That was our primary mission and goal. And I think we just want to continue going down that pathway.
Wow. That's incredible. That's incredible, Brian. Thanks very much for sharing those insights about your personal journey, your the vision of the company, how you are helping different organizations. I think that brings us to the end of the official podcast.